November 14th, 2024, a Friday morning. While you were scrolling your phone, $4.3 billion vanished from U.S. government bonds. Not stolen, withdrawn, moved. The trader in Frankfurt who caught it didn't sound alarms. Large money shifts daily. But then Saturday night, another $3.8 billion disappeared. Sunday, $5.2 billion more. By the time November closed, $23 billion had silently exited the system. Not from Beijing, not from Tokyo, from Abu Dhabi. And this was just the beginning. What I'm about to show you isn't prediction. This is happening right now. Documented flows, public filings, verifiable numbers. And when you see the pattern, when you understand what these movements mean, you'll realize the financial world you planned your future around is already gone. The Middle East controls approximately $4 trillion in sovereign wealth. $4 trillion, more than Germany's entire economy, comparable to every ounce of gold ever mined in human history. For 30 years, roughly 65% of that money sat in Western markets. U.S. Treasuries, European debt, American real estate, Wall Street equities. Middle Eastern capital was the invisible foundation holding up American consumption, funding deficit spending, keeping your mortgage rates low. Then something broke. By the end of 2024, only 52% remained in Western assets. 13% withdrawn. That's $520 billion. $500 billion flowing out of New York and London. Not in a crash, not in panic. Methodically, quietly, like water leaving before the ground cracks. Now here's what makes this different from normal market movement. Sovereign wealth funds aren't managed by people reacting to CNBC headlines. These are former central bank governors, economists with security clearances, analysts who see economic data years before it becomes public. When they move this kind of money in coordinated fashion, they're not guessing. They're responding to something structural, something permanent, something they know you don't. And every single one of them is moving in the same direction. To understand what they see, you need to know what happened on February 24th, 2022. Russian forces cross into Ukraine. Within 48 hours, Western governments freeze $300 billion in Russian central bank reserves. Not a small nation, not a rogue state, a G20 economy, a nuclear power, a major energy exporter with deep European trade ties. And in 72 hours, their dollars became inaccessible. Now put yourself in Riyadh, Abu Dhabi, Kuwait City. You manage billions in national reserves. You just watched the West demonstrate something you thought was impossible. That your dollars aren't actually yours. They're Western dollars you're permitted to hold, until you're not. The calculation was immediate, universal. How much of our national wealth should sit in accounts that can be frozen by foreign decree for political reasons? The answer came back the same everywhere. Less. But that was just the visible fracture. Underneath, something worse was building. U.S. national debt in 2021. $28 trillion today, $36 trillion. An $8 trillion increase in less than 4 years. The government borrows roughly $2 trillion annually to bridge the gap between revenue and spending. That money comes from bond sales. And historically, 3 groups bought those bonds: domestic institutions, the Federal Reserve, and foreign governments. But China stopped buying. They're selling. Japan is reducing purchases, which means the entire structure now depends on Middle Eastern capital continuing to absorb American debt. Except they're not. Here's where the mathematics turn predatory. If nobody wants your bonds at current rates, you raise rates until someone does. But the U.S. already pays over $1 trillion yearly just servicing existing debt. A 2% rate increase adds $700 billion in annual interest costs. Where does that come from? More borrowing, more bonds, higher rates, more interest, the spiral tightens. The only thing preventing this collapse has been foreign buyers accepting low returns. That support is now withdrawing. And once it fully exits, the trap closes. Look at what this means structurally. Every economy that's ever lost its primary foreign creditor has faced the same impossible choice. Raise rates to attract new buyers and watch domestic debt become unpayable. Or keep rates suppressed and watch the currency collapse through inflation. There's no third option, no clever policy fix, no technical solution, just mathematics and consequences. And the people who see this happening, the ones managing trillions, aren't waiting around to find out which path America chooses. They're leaving now. While exits are still orderly, while markets still function, while there's still time to move without triggering panic. You might think they're just rotating within U.S. markets. Different assets, same country, that would be manageable. Look at the actual data. U.S. equity holdings by Middle Eastern funds, down 18% since 2022. American real estate investments, down 22%. Corporate bonds, down 15%. Across every major Western asset class, exposure is contracting. Where is it going? Chinese government bonds, $87 billion in new purchases. Indian infrastructure, $43 billion. Southeast Asian manufacturing, $31 billion. The Abu Dhabi Investment Authority now holds more Asian assets than American assets. First time since 1976. Let that sink in. For nearly 50 years, Middle Eastern sovereign wealth viewed America as the safest, most profitable home for capital. That belief just ended. This isn't portfolio adjustment, this is conviction shifting. And when conviction shifts at this level, among people with access to information you'll never see, it doesn't shift back. Capital doesn't make emotional decisions. It doesn't hope things improve. It goes where survival odds are highest, where growth is most probable, where the future most likely exists. And right now, that capital is flowing out. Look at the pace. 2022, $180 billion withdrawn. 2023, $210 billion. 2024, $230 billion. It's not slowing, it's accelerating. Each quarter faster than the last, like water finding cracks, then widening them, then becoming a flood. This is what structural breaks look like before they become obvious. Gradual, then sudden, then irreversible. And let me connect this directly to your life. Because what's happening in sovereign wealth offices in Abu Dhabi isn't abstract financial theory. It's already in your mortgage payment, your retirement account, your grocery bill, your future. Mortgage rates in 2021, 3%. Today, over 6%. A $400,000 mortgage at 3% costs $1,686 monthly. At 6%, $2,398. That's $712 more every single month. Over 30 years, an additional $256 and $320. Same house, same loan. The only difference is foreign capital stopped subsidizing American debt. And rates aren't done rising. They can't be, because the math doesn't work otherwise. When your primary creditor walks away, you pay more. Always. There's no exception to this rule in economic history. Your 401k depends on consistent foreign buying to prop up stock valuations. When that buying slows, markets don't plateau. They correct. Violently. Prices compress toward actual earnings instead of inflated expectations. Your retirement balance doesn't just stop growing, it shrinks. Exactly when you can least afford it, during your peak earning years when you're supposed to be accumulating wealth, not watching it evaporate. If you're on fixed income, you're watching purchasing power dissolve in real time. Social Security checks might increase nominally, but if inflation outpaces those increases by even 2% annually, you lose 35% of your purchasing power over 20 years. Food costs more, medicine costs more, heating costs more, everything costs more, and your income falls further behind every single month. This is how structural shifts destroy individual lives. Not through spectacular crashes you see on the news, through slow strangulation. Through the constant grinding pressure of higher costs and lower returns and wealth that just quietly disappears while you're trying to figure out why everything feels harder than it used to. That feeling isn't in your head, it's mathematics bleeding into your bank account. Now here's where this becomes historical, where the pattern reveals itself. What we're watching isn't just capital moving between markets. This is the architecture of global power being dismantled and rebuilt somewhere else. For 80 years since 1945, the United States has been the center of the financial universe. The dollar became the reserve currency, trade settled in dollars, foreign governments held dollar reserves. Oil was priced in dollars, and the Middle East recycled that oil revenue straight back into American assets. They funded our deficits. They absorbed our debt. They kept our interest rates artificially low. They enabled the American lifestyle. That entire structure is ending. Not tomorrow. Not in a single dramatic moment, but methodically, systematically, irreversibly. It's not because America is collapsing. We're still wealthy, still militarily powerful. But that's not how these transitions work. Empires don't fall because they become weak. They fall because others become stronger. China's economy now rivals ours in absolute size. India will be the world's third largest economy within a decade. Asia collectively is surpassing the West in GDP, in manufacturing capacity, in technological development, in every metric that actually matters for long-term power. And when economic power shifts, financial flows follow, not immediately, not all at once, but inevitably, like gravity, like water flowing downhill. History shows these transitions never reverse, never. Capital flowed from Amsterdam to London in the 1700s as Dutch economic dominance faded. It never flowed back. Amsterdam is still wealthy, still beautiful, but it's not the center anymore. London to New York in the early 1900s as British imperial power declined. That shift was permanent. Britain is still a major economy. But the pound is just another currency now, not the foundation of global trade. We're watching west to east now, New York to Shanghai, London to Singapore. And unless something catastrophic happens in Asia, something that fundamentally breaks their demographic and economic trajectory, this shift will define the next 50 years. Your children won't grow up in the world you did. They'll inherit a multipolar system where China is an economic and technological peer, where the dollar is one major currency among several, where American living standards remain comfortable but no longer exceptional, where the assumption of American dominance that shaped every financial decision you made no longer applies. That's not pessimism. That's demographics, economics, gravity working the same way it always has. But here's what most people miss. These transitions create extraordinary opportunities for people who see them early, not for those who wait until it's obvious. By then, it's too late. If you understood in 1910 that power was shifting from Britain to America, you could have positioned perfectly. American companies while undervalued. American real estate before capital flooded in. Dollars instead of pounds before devaluation. Those who acted early became generationally wealthy. Those who clung to British assets lost everything as sterling devalued by 80%. The same window exists now, today. If you understand power is shifting east, you can position accordingly. But it's narrowing fast. Every quarter, more capital repositions. Every month, the opportunity becomes less obvious and more expensive. Think about what diversification actually means in this environment. If the dollar weakens over the next 2 decades, holding only dollars means guaranteed purchasing power loss. You need strategic allocation. Some euros, Swiss francs, exposure to currencies backed by strong fundamentals, assets that maintain value across currency regimes, gold, commodities, physical things governments can't print. Bonds become lethal in rising rate environments. Long-term bonds lock you into today's low rates while inflation climbs. You need flexibility, shorter durations, floating rates, the ability to adjust as the world changes. Consider where growth actually exists. Capital flows into Asia, Middle Eastern wealth bets on India, Southeast Asia, China. Maybe your portfolio should follow. Not everything, but some exposure to demographic growth, infrastructure build-out, rising consumption. If the next 30 years mirror British to American transition, being invested in the rising power makes sense. Real assets matter differently now. Sovereign funds shift from financial to physical assets. Infrastructure, commodities, land. The logic is brutal. Stocks can be frozen, bonds devalued, but physical assets hold value through political chaos. Gold especially. No counterparty risk, no government printing, no freezing what you physically possess. What we're watching is the end of Pax Americana. Not the end of America, the end of American-centered global order, the system that existed since 1945. For 8 decades, the dollar was the reserve currency. U.S. military power was unmatched. American cultural and economic influence shaped every other nation's policies. The world organized itself around American priorities, American markets, American power. That world is dissolving, not through military defeat, not through economic collapse, through diffusion, through the slow, inexorable redistribution of economic weight toward Asia. And the Middle East, which bankrolled American dominance for 50 years by recycling oil profits into Treasury bonds and Wall Street investments, is now systematically, deliberately, irreversibly reducing that exposure. They're not betting against America. They're betting on a multipolar future where America is one major power among several, not the unquestioned center. And they're positioning accordingly, while the transition is still early enough to execute cleanly. This capital movement out of Western markets isn't a crisis requiring panic. It's a signal. Clear, loud, unmistakable. The global financial architecture is being rewired. The Middle East funded American deficits for half a century. They propped up the dollar. They absorbed U.S. debt at rates that made no economic sense except as geopolitical alignment. That alignment is ending. They're diversifying into Asia. They're reducing dollar dependence. They're preparing for a world where American power still matters, but no longer dominates their strategic calculus. If the people managing $4 trillion in sovereign wealth are making that fundamental calculation, you need to ask yourself whether your own financial positioning still makes sense, whether the assumptions you built your retirement plan on still hold, whether the world your portfolio is designed for still exists. This is where financial markets intersect with historical patterns. And right now, we're living through one of those rare, visible moments where the underlying structure is actually shifting, where the pattern changes, where what worked for the past 50 years stops working. You can ignore this. You can assume it doesn't apply to you. You can hope that American exceptionalism, American innovation, American military power somehow exempts us from the economic gravity that's affected every other empire in history. You can wait for financial media to tell you it's time to adjust, by which point every sophisticated investor will have already repositioned and the easy gains will be gone. Or you can pay attention now, understand what's actually happening, and position yourself for the world that's coming instead of clinging to the world that's already disappearing. But understand this with absolute clarity. The November 14th withdrawal of $4.3 billion wasn't random portfolio rebalancing. The $520 billion that's moved over 24 months wasn't panic selling. The systematic, coordinated reduction in Western exposure by the world's most sophisticated money managers, people with access to data and analysis you'll never see, wasn't a mistake they'll reverse next quarter. They see something. They understand something. They're acting on information and analysis that tells them the future looks fundamentally different from the past, that the assumptions underpinning 50 years of Western financial dominance no longer hold, that the world is changing in ways that require completely different positioning. Do you see it? And if you do, what are you actually doing about it while there's still time to position cleanly, before the shift becomes so obvious that everyone is trying to exit the same door simultaneously? Because the pattern is already in motion. The flows are already reversing. The structure is already changing. And whether you participate in this transition consciously, with intention and strategy, or whether you just get swept along unconsciously by forces you don't understand, will determine whether the next 20 years build your wealth or systematically destroy it. The sovereign wealth managers in Abu Dhabi, Riyadh, Kuwait, Doha have already made their decision. They've analyzed the same publicly available data you can access, the same debt-to-GDP ratios, the same demographic projections, the same geopolitical realignments, and they've concluded that the future requires fundamentally different asset allocation than the past. Maybe they're wrong. Maybe American exceptionalism proves stronger than mathematics. Maybe technology or innovation or some unforeseen development restores complete American economic dominance and makes the dollar unquestionably stronger than any alternative. Or maybe they're right. Maybe they see the pattern that everyone else misses until it's too late to act on. Maybe they understand that economic gravity works identically across centuries, regardless of how special or different any single nation believes itself to be. Maybe they've studied what happened to Dutch investors who kept their wealth in guilders after 1780, or British investors who stayed in pounds after 1931 and decided they're not going to be the next generation that learns this lesson the hard way. History doesn't repeat itself exactly, but it rhymes. It follows patterns. And right now, the rhyme sounds uncomfortably familiar to anyone who understands how these transitions unfolded before. The smart money is already moving. The patient money is already repositioning. The generational wealth is already flowing east. The only question is whether you're moving with it or standing still while the ground shifts beneath you.